Hello everyone, welcome back to Nandu's Equity. Today we are going to see how to identify multi-bagger stocks using screener and by using Peter Lynch's 15 simple criteria. And of course we are going to identify about 7 multi-baggers out of the screening and we are going to review them in detail for 2025. So what is a multi-bagger? Peter Lynch from America coined the word multi-bagger. Any of your stocks gives 100% or more gain, that is kind of multi-bagger. And if you are investing 100, if you are getting 500 or 10,000, that is like 5-bagger, 10-bagger is what we simply say. Most of you already know Peter Lynch, who is an American investor and also the Fidelity Magellan Fund manager who managed this so effectively from about 1977 to 1990, that is about 13 years, and given annual return of 29.2%. Compared to S&P, this was quite high during this time. So he had written many books. One of them is One Up on Wall Street. In that only he mentioned the word multi-bagger. And also during his tenure as the fund manager, the AUM really increased from 18 million to 14 billion. There are about 15 different characteristics or criteria that we can set to select multi-baggers as per Peter Lynch. That is what we are going to see first. Some of the basic things like market capitalization, promoter holding and pledge of shares we can easily set in screener. So this come under basic filters. So we do not want to keep the market capital less than 1000 to be very safe and avoid higher risk. And if you want to take risk, probably you can keep it at more than 500 also. And we want to always look for companies with strong promoter holding so that the promoters are strongly invested in the same company so that they will have higher focus. And of course, we want to look for companies with low pledge so that the significant portion of their holdings are not pledged. The management quality and competitive edge are more of a qualitative measures. However, we can definitely check ROE and ROCE more than 15% so that it indicates effective management and profitability and of course demonstrates strong capital allocation. The next measures are earnings growth and margins. We can easily identify them by setting EPS more than 15%, particularly for 5 years. And of course, if we select the operating margin more than 20%, which clearly indicates pricing power and operational efficiency. And of course, we want to check free cash flow for growth, so that should be at least greater than 0. This is our normal valuation metrics. We want to keep PE ratio less than industry PE and also less than 20 at times. And when it is not possible, we can set this as OR condition, like PE ratio less than industry PE or PE ratio less than 20. And of course PEG ratio less than 1 and greater than 0 so that we will account for growth while evaluating valuation and also we get a clear entry point. The next one, he strongly emphasizes to look for companies with less debt or no debt. So we are going to look for companies at least less than 0.5 in terms of debt equity ratio. And of course we want to check for interest coverage more than 3, which confirms that the company can comfortably service its debts. Sixth one is more about growth potential. Sales growth for 5 years should be more than 15%. And of course we cannot really look for high R&D and innovation, but if the company is spending a lot of money on this, that's really good. Finally, we want to see some optional measures like dividend payout, which should be more than 0, which is really good but quite optional because many growth companies may not give dividend initially and even something like a startups. And there are so many other qualitative measures. I keep sharing a lot of quantitative measures because that are easy to do in terms of finding, evaluating, screening. But the qualitative measures we have not spoken much, but they are also quite important. So that could be like a very good management, brand reputation, trust, ethics, values, culture and corporate governance in terms of compliance for audit. So many other things are there so that goes with the brand reputation and trust. So please ensure checking those things also when you are selecting multi-baggers, which are especially small cap and mid cap. I have incorporated all these measures from Peter Lynch as a criteria and created the query. and you do not have to recreate this query. It is available in the screener itself. So go to the search part of the screens and just type Nandus. You will get all my queries there, so you can easily select and execute anytime you want. Based on all these query and Peter Lynch criteria, I got number of companies. From that I have filtered about 7 multi-bagger companies, potential multi-baggers. So first one is Arrow Green Tech. So I'll talk about the business after this. First let's look at the numbers. Currently available close to 800 and about 20 to 30% below its all-time high. Available quite cheaper from PE ratio and PEG ratio perspective, having very strong EPS, ROE and ROCE. Arrow Green Tech is having a focused business on water solubles, bioplast, and having about 34 different patents globally in India, UK, USA, South Africa, Europe and Asia. So almost like having very specific focus on this water soluble, which can be used for various purposes. For example, even medicines that can be used. So you can go to this particular website I have included in the description to understand the business of this company. What really impressed me is about their focus on research and also long-term growth prospects that we can see, and many customers that they are having. Looking at their quarterly results, you can clearly see from operating profit perspective, it has turned from negative to positive, and also after it turned positive, it has got a real good trajectory. And also looking at its profit before tax and net profit, quite impressive in terms of its growth. The second company is Route Mobile. Many of you already know, but definitely it is currently available cheaper at 1400 level and with all-time high of 2389, and even if from a P ratio, PEG ratio perspective, it is available cheaper. And look at its EPS, ROE, ROC, quite lucrative. Route Mobile has a strong history of 20 years. It was started in 2004 and listed in 2020. And it has been acquiring a lot of different small companies as well. Pretty strong in the global solutions, focusing on SMS, like they have a lot of partnership for Fortune companies and also governments. And of course, their cloud solutions are quite popular. So you can really research about this company, lot of different arenas that they are into, and they are acquiring lot of smaller companies. So pretty strong growth. This could be a real multi-bagger in the future. Next company in our list is Talbros, having an auto ancillary focus and currently available cheaper from a P and PEG ratio perspective with strong EPS, ROE and ROCE. Talbros having strong market presence. For example, its gaskets are quite popular and about 50% of the market shares is with Talbros. And almost all kind of companies, whether in India or outside, they buy their gaskets and heat shields, forgings, chassis components and anti-vibration products and hoses from Talbros. So it has a very strong market presence and also market share. So this is kind of quite having a strong growth for last 5 years plus, and definitely expected to grow multifold. Fiem is the next company in our list. This is also an ancillary company, currently available at 1487 level, and definitely with a cheaper PE ratio, PEG ratio, and of course a very strong EPS, ROE and ROCE. Fiem is actually focused on automotive lighting. If you see, almost all kind of companies in India are its customers, and also from rear view mirrors. So those kind of signaling products also coming from Fiem. The fifth company in our list is Ganesh Housing. Generally, I do not pay too much of interest into the real estate sector, but this one is quite different. Currently available at a very cheaper PE ratio, PEG ratio with a very strong EPS and ROE, ROCE. Let me explain to you why this has attracted from the real estate perspective. Ganesh Housing is based out of Ahmedabad, Gujarat, and having a real good development prospects in the recent time, and their projects are focused on IT, SEC, premium residential projects, township, malls, hotels, clubs and service apartments. What really impressed me about is their past history of growth, and of course from a profit as well as revenue perspective, and also looking at their projects. If you get time, look at their various projects that they have developed in the last 5 to 10 years time frame, and you can get all those details in the website that I'll be adding in the description. The sixth company in our list is Dynacon System, available quite cheaper from P and PEG ratio perspective, and looking at its EPS, ROE, ROC, all are quite lucrative. Dynacon Systems are having very strong client base, government, PSUs, and a lot of customers from BFSI, and of course they have a different set of customers from global locations, and quite focused on multi-fold portfolios, and also the growth trajectory for the last 5 years is quite strong. The final company in our list is Banco Products, another auto ancillary company, available little less than 500, 470 levels, and of course with a very cheap P ratio and PEG ratio with a clear entry point. And looking at its EPS, ROE, ROC, all are quite strong and very interesting. Banco Products are focused on radiators, oil coolers, and other engine assemblies for cooling systems and air coolers. So they have a very strong customer base. Almost all kind of car manufacturers are their customers. Also there are several international customers, so which is why this particular company is growing pretty fast. And of course this is the third company in the auto ancillary space that we are reviewing as part of multibaggers. So out of the 7 companies, 3 are auto ancillary companies. Be watchful, because the auto industry going through a lot of cyclicals, and of course we are hearing there is a lot of unsold inventory. So if the auto industry crashes, these companies also will come down cheaper. So that would be a real good time to enter. And of course we also saw Route Mobile and Dynacons from unique software products and solutions, cloud solutions. So they are not going to be easily available cheaper, and of course keep them in your watch list. And from real estate perspective, Ganesh Housing is quite interesting. I have never come out of these kind of real estate companies. It's the first time I am reviewing them. And of course the other company that we saw was Aero Green Tech, quite unique from green tech companies, having strong intellectual properties like 34 different patents. So keep all of them in your watch list. None of them are buy or sell recommendations, so do not mistake. And wish you very good prosperous new year. Happy New Year 2025. Hope this video is useful to you, and if so, please click the like button. If you are not subscribed, please click the subscribe button. Also share your feedback so that I can continuously improve, and also look for ideas what you are really searching for that I can incorporate. Thank you.